Now, property news, and it's good news for people looking to buy, but not so great for homeowners.
Yeah, Domain's State of the Market report is out today, and the chief economist, Dr. Andrew Wilson, joins us now to break it all down for us. Bad news for some, good news for others. Let's begin with house prices. Andrew, where are they up at the moment?
Well, look, house prices are up again in Melbourne, which is no surprise. That has been the strongest market over the past year, but not up by as much as they have been recently. Prices increase were well below the June quarter, and it was the lowest price increase for Melbourne for 3 years over the quarter. Other capital cities' prices fell. Perth still down. The Sydney market down by 1.9%. That's the first fall in Sydney for 2 years, and only the second fall in median house prices in Sydney over a quarter in the last 5 years. So looks like the good times are over for the Sydney market.
Is that just unit prices, do you think?
Well, look, unit prices in Sydney were also down by 0.8%. That's 2 quarters in a row, Carl, where unit prices have fallen in Sydney. I still think that market's pretty stable. In fact, the interesting unit market was the Melbourne unit market, where prices were up by nearly 4% over the quarter. And I think in Melbourne, it's suburban units that are attracting all the buyers. Inner city units are still a little flat, but certainly units are growing stronger than houses in Melbourne at the moment.
So to be clear, when you say the prices are down in Sydney there, it's not necessarily the beginning of a crash, but it's just more of a softening.
Well, look, there's a couple of factors at work here. Obviously, the further we get away from those interest rate cuts of last year, the less energy we have to push up prices. But the real factor this year, particularly in Sydney, has been higher interest rates for investors. Sydney has the highest proportion of investor activity. Similar to 2 years ago, we saw prices fall when interest rates for investors were increased then. No surprise, same effect now. Prices are falling because interest rates for investors are going through the roof.
Okay, I want your tip on the best place to invest in just a second. But first of all, people renting, they're doing it pretty tough, aren't they?
Well, they are. Look, with some better news, Carl, over the September quarter for renters. Rents were largely flat over the quarter, but if we look over the full year, we can see that rents are still rising faster than incomes. And this is a conundrum because in most capital cities, we've just run out of rental properties. And if we're restricting investor activity, it means even fewer rental properties and even higher rents. So at least a short-term pause in rental increases over the September quarter for most markets.
Where then is the best place to invest right now, Andrew?
Well, look, if we look at the numbers, actually Canberra's a pretty good market for units. We're seeing prices increase for Canberra units again. Yields are the highest in the country. And that Canberra market actually has an undersupply of property traditionally. And I think that we'll start to see prices rise for Canberra units sooner rather than later. And it too has a shortage of rental stock. So rents are also rising. So I think a good pick at the moment would be the Canberra market, particularly for units.
Viva la public service. Thank you, my friend. Talk to you soon.
Thank you, Carl.
Okay, cheers. Over to Timmy.
Oh, I love